This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Russia's finance ministry plans to cut the discount it uses to set taxes on the country's crude oil exports to $20 per barrel from $25 currently, Finance Minister Anton Siluanov said in remarks published on Tuesday. Western sanctions over Russia's invasion of Ukraine, including the $60 a barrel price cap on Russian crude exports and the European Union's import ban, have forced the Kremlin to change the way it taxes oil sales. Russian President Vladimir Putin in February signed a law fixing the discount on Russia's dominant Urals blend of crude oil for tax calculations.
Oil prices edged higher for a third straight session on Tuesday, as signs of tighter supplies and pledges by Chinese authorities to shore up the world's second biggest economy lifted sentiment. Brent futures gained 25 cents, or 0.3%, to $82.99 a barrel by 0633 GMT, while U.S. West Texas Intermediate crude rose 27 cents, also 0.3%, to $79.01. Both benchmarks settled over 2% higher the previous day at their highest closing levels since April. The crude benchmarks have already climbed for 4 weeks in a row, with supplies expected to tighten due to cuts from OPEC+. Some analysts say it could rise further in the short term.
Moving on to the top news in the energy sector.
While U.S. gasoline demand is unlikely to rescale the pre-pandemic peaks of 2018 as the energy transition accelerates, the pace of its decline is uncertain, illustrating the challenge for industry and the government in planning the shift to a low-carbon economy. The complex interplay between the transition, policy, economic performance and consumer preferences have made it harder than ever to forecast gasoline demand. Those forecasts are important for oil refiners making decisions on production and capacity, as well as for policymakers overseeing the transition. If refiners close capacity more quickly than demand drops, motorists could face higher fuel prices or even shortages.
The U.S. government will provide up to $1.55 billion in funding to monitor and reduce methane emissions from the oil and gas sector, two agencies said on Monday. The funding will be accompanied by technical assistance for companies to rein in emissions of the planet-warming greenhouse gas from leaks and daily operations, the U.S. Environmental Protection Agency said. The amount of methane emitted from oil and gas operations is enough to fuel millions of homes a year, and is a major driver of the climate crisis, said Joe Goffman at EPA's Office of Air and Radiation.
Next, we have the top news in metal markets.
Indonesia is finalizing a new set of incentives to attract investment from manufacturers of electric vehicles, EVs, a senior minister said on Tuesday, adding the government is still in talks with major companies like Tesla and BYD. Speaking at a nickel industry conference hosted by CNBC Indonesia, Coordinating Minister of Maritime Affairs and Natural Resources Luhut Panjaitan said the incentives will be benchmarked against those offered by regional rivals Thailand and Vietnam, but did not provide details. Indonesia, the largest economy in Southeast Asia, has been trying to attract EV makers to invest in the country, enticing them with its rich nickel reserves, the world's biggest, which can be processed into EV batteries.
Vietnam aims to raise its rare earths production to 2.02 million tons a year by 2030, according to a government plan reviewed by Reuters, as it seeks to tap one of the world's largest reserves of key industrial metals. The Southeast Asian country has the world's second largest reserves of rare earths, an estimated 22 million tons, second only to China, according to the United States Geological Survey, USGS. Its rare earths production jumped to 4,300 tons last year from 400 tons in 2021, the USGS said. Higher output will be helped by extraction from 9 mines in the northern provinces of Lai Chau, Lao Cai and Yen Bai, according to the plan signed by Deputy Prime Minister Tran Hong Ha on July 18. We will now look at the top news in the agricultural sector. The European Union's crop monitoring service on Monday further reduced its crop yield forecasts for this year's harvest in the bloc, including grains, oilseeds and sugar beet, citing dry and hot weather conditions. Crop prospects in the EU have taken on extra significance since Russia's invasion of Ukraine, a major wheat, corn and sunflower exporter, has disrupted Black Sea exports and raised uncertainty over Ukraine's harvest. But scorching temperatures in many parts of the bloc and excessive rains elsewhere have reduced hopes of a bumper crop.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.